Hey traders, Nick here, looking at Tesla. Okay, this is stock that is hated and loved at the same time. More recently, it's more hated because of whatever is going on in the news. Anyway, I'm trying to give you some clarity and trying to see if we can find some support. So if I were to summarize this whole scenario, this is a stock that is giving back a little bit to find footing. Now you're already going, what, a little bit? It just fell 8% today. What are you, an idiot? No, but it's giving back a little bit. However, that little bit is a lot because the rally was insanely big. Okay? You get the point? So when a stock rallies from point A to point B, it's normal to give back half. Well, that would be usually a little bit. In Tesla's case, point A to point B was extremely huge, and I'm going to show you. So this is just giving back some of that extremely huge rally. So it seems like it's an abyss. It's a never-ending hole. Okay, so let's give me some credibility as to knowing charts a little bit. Today in the live room, I was trading actively, sharing my screen to 300 traders. 330, I think, at one point today. And in the morning, I said, step away from Tesla, stop catching the falling knife. Some people had shares that were looking to add. I said, I wouldn't. Some people were trying to sell covered calls. I said, I would definitely sell covered calls, which are bearish short term. And some people were looking to sell a put spread. I said, I wouldn't. And then it fell to here. And then I said, thank God I warned. And then this happened. I said, listen, folks, Tesla today could be 138 to 137.5. And it was 137.38 at the low after the market closed. So it went there. So we know charts. That's what I'm saying. So you might want to listen for a couple minutes and get some clarity as to how we got here, where we're going to stop, and how I would trade it. And I'm not giving trading advice. I'm just telling you my perception. Now, fundamentally, I'm going to put that aside because I believe that the company is better than Ford and GM put together on the fundamental basis. I know that's sacrilege, but listen to this number. The gross margin, the last time I checked, so profitability at the very top line, make the car, how much it costs to make the car, what do you net out of it, forget the P&L below it, gross margin. Tesla delivers more dollars, absolute dollars, than GM and Ford, and GM and Ford, they both have more than double the sales. Imagine that. So you have double the sales and you still can't beat your competition as far as how much you can keep after making the car. So they know what they're doing when it's building a car. They're profitable. So the fundamentals are not in question. The valuation is the debate. I can argue that it's cheap, especially relative to itself. That's not a reason to buy it. So let's talk charts, and that would be a reason to trade it. And here's the deal. This is a short 1 minute chart. I'm going to go to 1 day chart. This is a whole year. This is still not enough to anyone say, okay, this is a good time to get out or get in. You can't. Why? Look left. You don't know where it's been. So you're going to have to keep scrolling left. I know the story. So let me tell you how this happened. Now, for that, I'm going to go to the SPY. Rewind to COVID. We ran into COVID, made an all-time high on everything, and it was ridiculously fast and out of nowhere and out of character. Somebody knew something about COVID before we did, and this rally was just like a last-ditch effort to do something. I don't know. Regardless, we crashed. We came back. This was normal. This here was already abnormal because we had no business being here to begin with. You recovered it and you got to here, and the world is still closed and the virus is on the rampage. So this was already weird. And then we consolidated. And then in the fall of 2020, remember that, fall of 2020, we took off 35%. As an index, 35%. Imagine what a fast stock will do. Well, you don't have to imagine. In the fall of 2020, Tesla went ballistic. So this is the COVID start for Tesla. What? Yeah, it's right down here. You can hardly see it. It's still 50% above that. So this whole when I said it gave back a little bit because it rallied a lot, people, this thing rallied 1,700%. from the bottom to the high. So giving back seems a lot, but it's normal. So they say Fibonacci levels, giving back 50% is normal. We just did that. So it's below 50%, but the important thing is now it's landing into that fall of 2020, that crazy period. Luckily for Tesla, it's been consolidated. Unlucky for Tesla traders, it's pretty wide because of this candle. So it just closed the gap. You can hardly see it. Let me zoom in. Right here today, it just closed the gap from, October, November 2020. And it has many little bounce levels here. The only problem with these, so these are supports. They're so far back. So if a machine is trading now on, say, a short-term basis, it looks left. It's like, dude, there's nothing here. What am I going to count on? Well, you have to go back 2 years, fella, and find these. They're not very reliable. So I'm going to give you numbers that I had forecasted for at least 2 months, maybe a month and a half. So this is Tesla, my chart to my members. They see these every day. They hear me talk about them every day live with my screen share. So they triggered a weekly breakdown on this trend line. The target became much, much lower. I put it here. And it was ridiculous when I drew it. I said if Tesla doesn't recover 215, 220 on a weekly basis and hold it, it's going to go down into the 140s. And it is vulnerable to go down into the 140s. It did today. My target is like 120, 119, something like that. Well, it's pretty damn close. This is more realistic to the actual target of the Head and Shoulders, but this is my target. So it's inside a box where I thought from weeks ago it would find footing. A very pivotal level is like 119. It's weird because usually markets like round numbers. And another pivotal level is 100. Clearly, that's a round number. The pre-pandemic level is in the 60s. So in the 50s and 60s. So it has a lot to fall if the markets crash. You want to tell me if the SPX corrects 15% that Tesla will not lose another 30%? It would lose it in a blink of an eye. I am not calling for all of these. I already did up here. So the trade now is over. If you're trying to short Tesla here, you could make money, but it's the wrong thing to do. It's not the easy thing to do. If you're trying to go long Tesla right here, you could make money, but it's not going to be easy. So here are my final statements on it. If I'm long stock, I'm not looking to add yet. And let me break that into two groups of people. If I'm long stock and I took all the stocks I need to take for Tesla, I am not adding, period. I'm stuck wherever I bought it. If I'm long and I didn't take a full-size position, okay, I can add at much lower than my entry point. So that becomes, where did I buy it? If it was $100 above, maybe I add some, not all in. If you twist my arm to trade Tesla here, my overall view on the market is more bullish than bearish. So I would say, okay, if the market's going to stabilize and recover in the next 6 months, then I would bet up on Tesla, that it's going to find support inside here. The way I trade, I don't need to buy calls. I don't need to buy shares. I sell risk. So if somebody freaked out and wants to buy puts, I will sell them those puts instead of buying the share here, which means I get paid to buy shares lower. That would be my trade on Tesla. I'm not going to give specifics. And if you don't know what that is, you better do your homework on how destructive that can be if you don't know how to do it. It's safer than buying stocks if you know what you're doing. So if I want to own 100 shares, I don't have to. I can sell a put to own those 100 shares lower if they give them to me. If not, I keep their money. So that's how it works. And technically, it is in a breakdown. It has not hit the targets. It's almost at my target, which is conservative. And the bounce will find sellers. So if it rallies a little bit and you start buying calls like it's going back to the moon, maybe you make money, but it's the wrong thing to do. You need to see stabilization first. Support is too old to be reliable, but it is there. The first level of support is 127 and then 119, I just mentioned. It's in a support zone. So the best thing it can do is just float in here establish a sideways move, and start building back up slowly. These huge rallies and huge drops. These huge rallies bring huge drops, so it doesn't do you any good.